Everybody, happy Wednesday, July 22nd. Thanks God for giving us another day of life. Um, 1 second. There we go. Back. I want to start off with reading some Psalms. Recently, I've been learning about how God wants us to find joy in Him. God put us on this earth not to, be angry or be unselfish through self denial, but actually be joyful in self denial, be joyful in seeking Him, to be joyful in giving mercy and forgiveness to others, to find joy in Him. And so, if you're lacking joy in your life, just want to remind you that God wants us to be joyful in Him and His creation and enjoy the life that we've been given. Psalm 16 says, "Keep me safe, O God, for I've come for your refuge. I said to the Lord, you are my master. Every good thing I have comes from you. The godly people in the land are my true heroes. I take pleasure in them. Troubles multiply for those who chase after other gods. I will not take part in their sacrifice or blood or even speak the names of their gods. Lord, you alone are my inheritance, my cup of blessing. You guard all that is mine. The land you have given me is a pleasant land. What a wonderful inheritance." So he uses pleasant. "I will bless the Lord who guides me. Even at night, my heart instructs me. I know the Lord is always with me. I will not be shaken, for he is right beside me." And listen to this. "No wonder my heart is glad and I rejoice. My body rests in safety, for you will not leave my soul among the dead or allow your Holy One to rot in the grave. You will show me the way of life." And important here, granting me the joy of your presence, the joy of your presence and the pleasures of living with you forever. So tells us God wants us to have joy in Him. He wants us to rejoice, to sing a loud song of praise and happiness and blessing in Him. And that's okay to go find things that you're happy to go do, things that bring you joy. God created all those things. He created this world as a reflection of Him and His love for us. So go find joy. Go and pursue those things that give you joy. God created all this land and all this earth for what? For us to get to Him at the end of the day and say we didn't find joy in it. It's like if you're a father and you create a great feast for your kids and the kids don't eat it. The kids look at the feast that you created for them and turn away from it. It's like, doesn't make sense. So find joy today in God. Go seek your happiness, but always know that the greatest joy is found by walking with God and being with Him. All right, guys, want to get into the book summary. So every day I'm starting to review. So what I do on my end is read a book for about 50 minutes that pertains specifically to our strategy of the momentum scalping strategy, and take notes on it, and then bring you here with a summary of the chapters I read. And these are all notes and skills and techniques that will help you to become a master momentum scalper. That's my goal for you. That's my goal for myself, is to master this just like any other skill. Master this like any other um master this like any other endeavor or sport. Every sport, when you break it down, like soccer, I play soccer my whole life. Soccer, you get good at the first touch, you get good at two touch, you get good at passing, you get good at shooting, you get good at crossing, you get good at awareness, you get good at shielding the ball, you get good at keeping the ball in the air, first touch, landing the ball. So within soccer as a skill, there's all these sub techniques that you need to get good at. So the breakout and pullback is a technique within a momentum scalping strategy that will help make you successful. So this is a book that I value. It's by Michael Norman. This is chapter 1 and 2. 1 second. Let me just need to get this right, guys. All right, let's jump into it. Breakout and Pullback Strategy by Michael Norman, Chapter 1 and 2. So, Chapter 1 is he talks about the whole point of trading, guys, is to manage our losses. Okay, people think trading is a way to maximize gains. It's actually not. Trading is about maximizing our losses. There's a fundamental principle of trading that trading is risk management at the end of the day. It's managing our downside. If you can manage your downside, you will be good. You will, if you manage your losses, you will be good in this. And that takes discipline, setting stop loss, everything. But if the whole fundamental mindset and paradigm here is trading is to manage our losses, don't try to avoid them. Minimizing losses and maximizing profit, that's the whole job. And maximizing profit here, the market will decide that for you. You have some say in that based on your entry and exit, but you can't control what the market does. You can only sit and respond. The market will do whatever it wants. If you minimize your losses consistently, that's up to you. You have full control over that. You can control how much losses you have. What you can't control is what the market does. And then you will find that the market will reward you for that because the market will go up and you didn't decide that, but it happened. Losses are simply just the code of doing business, business breakouts included. A genuine breakout shows up with expanded volume behind it. And in this screen, see if I can zoom in for y'all. So here you can see a template that he included in his book about what a breakout looks like. Here we have a range with a resistance, and you find resistance by multiple levels that have been tested. You can see that physically. You have support with multiple levels below that have been tested. This creates a range. We trade breakouts in momentum. We find that spot where there's resistance and we locate it by using a line. Here is a green line. And we find and time our entry so that we get in as it's breaking out. Because normally what happens after a breakout, like the term implies, that it breaks out. It shoots way over, and that's where you can capture profit. So there's two setups that create every breakout. There there's two forms of breakouts. There's a breakout that is from a support or resistance, or type 2, there's a breakthrough, swing higher, swing low. That's normally seen as a bull flag strategy. A sharp V swing followed by a quick sell-off marks the resistance zone or watch. So here is that there's a strong rally, and if you go to all my videos, this is what happens in pre-market. There's a strong rally, either from news catalyst or whatever, and then there's a swing high. So the swing high is a high point that's created after it's a swing. Like when you swing up and down, this is it's swing up and it marks the highest point that the stock went to. And then it creates a V shape, like a downwards V shape, because it followed by a quick rejection. So here you can see that V-shaped strategy. That's going to mark an area that we want to pass through. Most breakouts are actually fake. So in Al Brooks's book, which is pretty dense, I don't know if I'd recommend you reading it, but he says that most breakouts fail. Most breakouts statistically fail. Normally, it just gets put back into the consolidation range. So, in order for us to figure out what a good breakout is that we want to be involved in, we must confirm it with volume. Bogus breakouts are far more common than real ones. The VWMA, volume weighted moving average, helps tell the two apart. He uses this indicator. I personally don't. I'm going to see about it, but I don't use the VWMA. Watch for consolidation range that gets tighter and tighter before the move. So there's two things here he points out: volume and three things: volume, VMA, and a tight consolidation range that gets tighter and tighter before the breakout. That's really important. First, speaking on volume, on your graph, on your chart, you want to include the volume indicator. This is really important. Have that volume indicator set because volume tells you the strength of the move. You need a lot of volume in order to break out. Just like an analogy I would provide you with is when you're in bed in the morning, you need a lot of energy to get from sleep to going. You need a lot of volume of energy just to go from sleep to waking up. That's the same thing here. It's like the chart is sleeping and it's in a range and it's been there. It needs a lot of volume to push out of that. And it by volume it means the amount of transactions happening in real time. The one that's also important is that tight consolidation that he talks about. We'll look more into this, but a little mini consolidation right underneath an area of a breakout gives it more validity. Here we talk about letting the MVWMA confirm momentum. It's volume weighted moving average that measures the volume, the weight of the volume per price. He's looking for it stretching in favor of where we're headed, so stretching upwards, and a close below the VWMA may indicate that buyers are stepping away. So he lays out a three-step entry to taking breakouts. First, mark a clear range or a V-shaped swing high. So on your graph, literally, you will go and find the top V swing or an area of resistance, and you mark it with a line. An area of resistance is not just a line, it is an area. So maybe it's a few cents up and down. But for purposes of being able to trade momentum scalping, just mark it with a line. That's what I do. Secondly, you wait for a breakout candle that closes beyond that resistance. So we're tracking a stock, we have our line, we see that we're getting closer and closer to that resistance. Nice to have, even better, we see a little tight consolidation forming right underneath that line. This is our good signs. And then we see with volume, buyers coming in, it breaks out. So we want to wait for a breakout candle that closes beyond resistance to get in and confirm the VWMA extending. So there's three strategies here, and I'm going to add this. You can either get in right before the breakout if you see that there's a lot of momentum and buyers just swarming in. Get in right before. It's a little bit riskier because, like they said, most breakouts fail. You can get in right at the breakout, literally right at that point it breaks out, or you can wait for a candle close because many times it'll break out and then get rejected and you'll see a long upper wick, but the close was right at the breakout or below. That's an unsuccessful breakout. That means the buyers were not able to push through the resistance. So from most conservative to least conservative, you wait for the close to see that, yes, the buyers did succeed in breaking out. You get less conservative slightly is getting in right at the breakout, and the most risky, least conservative, is to get in before the breakout because you don't even know if it's a breakout in the first place, and then you're just trading close to resistance. Chapter 2, he gets into rules that are just good to follow when we're trading breakouts. And this is a fundamental rule of trading. Always trade with the trend. Go with the flow, go with the wave. And we can break down the math of this, but you don't need to look under the hood. This is just a fundamental principle. In simple terms, the when you're trading with the trend, you have more chances of it going in your favor when you're with the trend, and those moves last longer. Counter trend breakouts fight the dominant move and follow through less often. They follow through. So let's say you do get in on a counter trend, the length and distance it will go, the percentage that you will receive in return is less. Trading with the trend puts the higher probability side of the trade in your favor. So it's really just a numbers game. If you want to be on the right side of the numbers to make money, you trade with the trend. Second rule is stay near the structure. So trading far from a support or resistance leaves no nearby level for your stop. Staying close to the structure tightens the stop and improves your risk reward. So this is an interesting concept. So let's say we pass through resistance. If we're entering this image is not that great, but structure is that support and resistance that he's talking about. At those levels, you have support, you have a backing from other buyers. So if you get in close, that means you're managing your risk, because if you get in close to an area of support, you know that the furthest it will go down is that level of support, or at least temporarily it will test that level. I had a great idea. I acted on it, but I'm ordering a little whiteboard so that I can like draw for y'all in real time here. It's gonna make a big difference. I can visually explain to y'all what I'm talking about through a whiteboard, but just know that you want to get in close to support because you have an area to place your stop loss. A stop loss is an area that's the place that you will leave the trade to manage your risk if it doesn't work. Chapter 2, Rule 3, wait for the buildup before the break. This is what he was talking about. A little zone of consolidation right before the breakout is important. So price coiling right at the resistance means that sellers are stepping aside or buyers are showing some real strength. You ask yourself, why haven't sellers pushed it down? If we're getting up to the resistance, logically, sellers need to push it down, right? They haven't been able to. And you'll notice this with a lot of long lower wicks. You'll notice that buyers push it down and get rejected. Push it down and get rejected. The long lower wicks are proof that an area is backed by real strength from the buyers. Quiet buildup is often the tell that a breakout is imminent. So that's chapter 1 and 2. So fundamentally, treat losses as the cost of doing business. Like any other business, guys, you're going to incur losses. That's just name of the game. You got to pay to play. But you can control your losses. So rather than going willy-nilly, not knowing how much you're losing and then blowing your whole account, you can control your losses. Don't fear them. Manage them with stop losses. Confirm every breakout with volume and the VWMA before you commit. Confirm every breakout with volume. VWMA, I don't use personally, but maybe I'll learn more about it and we can confirm. But confirm it with volume. And I'll have more teachings on what that means with volume price analysis, which is a cornerstone of good momentum trading. Thirdly, trade with the trend near structure and after a buildup every time. Near the trend, trade with the trend near structure. We're finding it right close to support rather than overextended from support and after a buildup. So we're looking for a little buildup before telling that the buyers have shown real strength. All right, guys, that's the learning from today, chapter 1 and chapter 2. I have the PDF of this book. I'll post it in the Discord. If you're in the Discord, if you're not in the Discord, we'd love for you to join. It's $20 a month. It's the price of a freaking Chick-fil-A sandwich, bro. Um, for that, you can learn how to make money in the morning, diversify your portfolio, get another source of income. If you want to leave your 9 to 5, make your money in the morning and then have the rest of the day to work in other areas. That's for you as well. So I'll put the link to my website in this um, video. I'll put the link to the Discord in the video. I'm open to having intro calls if you're curious to learn more, if this is even something that's right for you, to go more in depth about expectations, what this world looks like. I'm happy to do a free intro call with you. Would love for you to join the Discord. And I also offer one on one coaching where I teach you everything that I know that's in my head. So, all that's on my website. God bless y'all. Hope you have a good day.